Welcome. Today, we'll take a quick look at AMD as an investment opportunity ahead of tomorrow's Q4 2024 report. In this video, we will focus solely on AMD's stock and won't be commenting on US political decisions, which may impact the stock market. The stock is currently around 115, with a market capitalization of $185 billion. The peak was over 200, which occurred at the beginning of last year. Could we see a similar move now? Let's first take a look at the reasons why the stock has declined. Video is not financial advice or a recommendation to invest. Always conduct your own research and consult with a professional advisor before making investment decisions. NVIDIA's dominance in AI GPUs remains a challenge, and AMD's AI growth is slower than expected. Companies like Microsoft, Amazon, and Meta are increasingly designing their own chips, reducing reliance on AMD. Market analysts have revised expectations lower, particularly for AMD's data center GPU revenue, cutting forecasts from $10 billion to $7 billion. Market-wide concerns about slowing tech spending have weighed on semiconductor stocks, including AMD. AMD has a tendency to always be second in everything it does. First, it competed with Intel, and when Intel couldn't respond, AMD had the chance to claim the top spot. But then, it shifted focus to competing with NVIDIA, and is once again in a challenger position. This isn't necessarily a negative thing, but if the AI sector doesn't deliver results quickly enough, the stock will take a hit, as we've seen now. Now let's take a look at the results. Q3 2024 results. Revenue, $6.8 billion, up 18% YOY, driven by data center and client segment strength. Gross margin, 50% GAAP, 54% non-GAAP, reflecting solid profitability improvements. Operating income, $724 million GAAP, $1.72 billion non-GAAP, a substantial increase YOY. Non-GAAP EPS, 0.92, up 31% YOY. Segment performance, data center revenue, $3.5 billion, 122% YOY, driven by EPYC CPUs and Instinct AI GPUs. Client revenue, $1.88 billion, 29% YOY, fueled by Ryzen processor demand. Gaming revenue, $462 million, by 69% YOY, impacted by lower console chip sales. Embedded revenue, $927 million, 25% YOY, affected by inventory adjustments. Next, let's look at the Q4 2024 forecasts. Q4 2024 revenue, expected at $7.5 billion plus -$300 million, continuing AI-driven growth. Gross margin outlook, 54%, signaling stable profitability. 2025 growth drivers, AI and data center GPUs MI325X series ramping up. EPYC CPU adoption growing in enterprise cloud sectors. Expansion into AI-powered PCs with Dell and other OEMs. This year is expected to be one of the largest computer refresh cycles in recent history. EPS is expected to improve as the negative impact from AMD's significant acquisitions and investments in the AI sector last year starts to fade. Valuation measures, PE 102, forward PE 25x, price to sales 7.8x. AMD's PE ratio is currently high, but both the PE and forward PE are exceptionally low. This primarily reflects the recent downturn in the AI sector, but also indicates that expectations for AMD have been declining. Bullish case, strong AI and data center growth positioning AMD as a major player in the AI computing boom. Increasing market share in CPUs, custom partnerships, Dell, Lenovo helping diversify revenue streams. Bearish case, competitive pressure from NVIDIA and Intel, especially in AI and cloud computing. Lower than expected data center GPU revenue impacting investor sentiment. Market-wide semiconductor downturn could weigh on stock performance. Conclusion. AMD's stock is starting to look attractive at these price levels, but competition with NVIDIA and the overall AI sector remains a bit of a question mark right now. The stock already reflects expectations of slower growth and potential setbacks, and its valuation multiples are quite appealing. We're looking forward to tomorrow's numbers to get a clearer picture of where AMD stands and what this year might look like. We'll revisit this in an update video. Thanks for watching, and don't forget to subscribe to the channel and like the video.